Welcome back to today's video. Today we're going to be talking all about how to improve your credit score in 2022. Hello, welcome back to our channel and podcast. My name's Gemma and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode, Let's Talk Money and Mortgages, we have Ifti joining us once again. Now, for those of you who don't know Ifti is a trained accountant and mortgage advisor who has been in the industry for over 10 years, and he is also one of the founding directors here at WYS. Welcome back, Ifti. How are you doing today?
I'm well, thank you. How are you, Gemma?
Yeah, I'm very good, thank you. So today we're talking about credit scores and how to improve your credit score. So firstly, probably we should say, what is a credit score and what does it mean in the mortgage industry at least?
So banks generally use something called a credit reference agency. Popular ones are ones like Experian, Equifax, TransUnion. They're the popular ones. We tell clients to use a consolidated one, which is Check My File, right? So these agencies rate you, right? They give you a score based on how well you use your credit, right? So a score closer to their maximum limit is what is kind of important. So getting a good credit score means your credit score should be pretty good as per these guys' ratings, right? So you probably want to aim to get towards a very good or excellent credit score. Those are the ones that the lenders prefer the most, right? So that's what a credit score is.
All right. So how do you improve your credibility?
Okay. Credibility is important because the banks look at your credibility before they lend out money to you. So you have to make sure that you have credibility. It's a bit funny because, the advice here is like try to get credit, right? To improve your credibility, the bank will want to see that you borrowed money and you settle them, right? So that's what they are after. So the easiest advice is to take things like credit cards. It's quite common. Everybody uses credit cards these days. So use a credit card, but settle it in full. That's the best thing that you can do. So if you do that, your credibility increases, right? Because they can see you paying your credit off, right? So credit cards is one tool that you can use to improve your credit score. Some people come and say, look, I don't qualify for a credit card, especially the first-time buyers, right? Because we deal with a lot of first-time buyers. For them, there are lower credit score credit cards, right? I think popular ones are I hear the term Aqua. Sorry, I'm not associated with that, but these are the terms I see often. Things like Ocean Finance, the interest rate is massive, right? But don't worry about the interest rate. The objective here is you settle your credit, right?
Yeah.
So you don't have to spend hundreds and thousands, right? Even if it's a £50, that's fine. Just settle it, right? Because that's what the bank wants to see. And make sure all your other payments are also made on time, right? So that's important.
Yeah, because it's about creating a track record, isn't it, basically?
Yeah, that's right. It's about creating a track record for sure, yeah.
Number 3, dependability. Don't apply for unnecessary credit cards and things.
Yes, that's right. So some people think, these are things I hear from my clients, right? I mean, somebody's given them some wrong information. Some people think if they have 10 credit cards and, they are keep it under control, their credibility increases, right? But you are lost with the dependability with those things because banks know that you have access to credit, right? You'll get a mortgage today and tomorrow you'll go and rack up a debt of £50,000, right? So that scares the bank, right? So don't go and apply for 10 credit cards. Because I see people come and say, oh, I've got 7 credit cards. They say it's good for my credit history. So I just took 7 credit cards. And I'm like, okay, I'm not sure who gave you that advice, right?
Yeah,
so
especially if they've got high limits, right? There's nothing worse than having 7 credit cards all with high limits.
Yeah, that's right. Because you have that headroom, right? Because banks know that you can make use of it quite easily. So they get a little worried if you have a lot of headroom and, you got all that credit lined up for you, right? So don't go and get credit cards unnecessarily. Sometimes people have a need to have 2-3 credit cards, but that's fine. But don't just go and take unlimited credit cards, right? Most people are happy with one. Banks are okay with it, right? So, yeah.
Definitely. Okay, number 3, traceability. We need to be able to trace you.
Oh, definitely. That's what it means, right?
Yeah.
So you should be able to trace a person. Mainly, this is about address. They want to see where you are, right? So best thing for you to do is to register on the electoral roll, right? There's a government website where you can easily register. Then the banks can track you, right? So they know where you live because this has happened for a lot of my clients. They're not on the electoral roll, but as soon as they register, they get a good few points up on their credit score, right? Because it immediately gives the lenders sort of confidence because they can trace where you are, right? So it's a very important thing. So make sure you're on the electoral roll. Some people don't register because they're a little worried, saying that my information is in the public domain. But there's an option where you can opt out on being in the public domain.
Yeah.
But credit reference agencies will see you, right? So just make sure that you're on that because it only helps you, right? So that is a very, very important thing that most people need to have.
Telephone. Tell us about the telephone, Ifti.
Oh, yes. Okay. This is quite funny, right? Still, right? I mean, a lot of people don't have land phones, right? But having a land phone sometimes does help you, right? Because there's some stability, right? Because the lenders know that you are in a house and your land phone is there, right? So,
You're not
they can
going
easily
anywhere.
trace you. Yeah, I know, because a lot of people think this is one from the past, but I think it's still quite effective because I have seen instances where this has made a difference. Because often we put the land phone in the mortgage application rather than the mobile phone because it can make a difference, right? Because banks can easily trace you, right? So that's kind of the idea behind it.
Okay, number 4, double check your addresses for errors. This can cause a lot of
Oh,
problems,
yes.
can't it?
It can, yes. Because a lot of people think just because you're on the electoral roll, matter sorted, right? It's not, right? Take your credit file out. Credit file will show your addresses, right? But sometimes it shows addresses where you actually have forgotten to tell the provider, like, mobile phone especially, right? They move house, forget to tell the mobile phone provider. It doesn't matter because, bills nowadays is not sent home, right? It's all electronic. So just make sure that all providers have moved it because otherwise they think you're associated with two properties, right? So if that's the case, it can affect your credit score. Especially for people who are quite marginal, these things can help.
Definitely. Okay, number 5, spread out applications.
Oh, yes. This is always been an issue, right? Because quite often people try to apply for a mortgage, let's say 3 at the same time. Now, when you do that, the third lender actually thinks you're desperate. The first 2 rejected you. So that can cause a problem for you, right? So don't do that, right? So if you think 2 lenders have rejected you, or sometimes people like to apply, let's leave my options open. Let's apply with 3 lenders, right? It's not a good practice, right? This doesn't only apply to your mortgage, even it applies to things like loans, right? Because you don't apply to A and B and maybe C bank at the same time trying to get the same loan, right? Hoping one will work. So people do that, right? And sometimes people take a loan and let's say 2-3 months down the line, they go and get a massive credit card, right? So the lenders worry because they think, okay, is he going to use that money towards the deposit? Is he going to do something else with it? They start to worry about it, right? So don't try to do these things in quick succession. It's not a good idea.
Number 6, show stability.
Again, it's a bit like the traceability factor that we spoke about. Often I find people sometimes keep switching bank accounts, right? They move from A bank to B bank to C bank, right? It's fine. I mean, sometimes banks gives you incentives to come, but don't do it closer to the mortgage, right? Because the lenders get a little confused as to what you're trying to do. So just let it be, right? If you want to switch, once your mortgage is sorted, you can switch, right? Because there might be nothing wrong with you, but it might give confusing signals towards the lender, right? So that's the one you must try and avoid as much as possible.
Number 7, reliability, not defaulting on your payments. This is so important. Even one, right, makes a massive difference.
Yeah, it can, right? Because most high street lenders, I use the word high street because they're often the cheaper ones, right? If you got a mispayment, you probably have to wait till that clears. Most of the time, at least they ask you to wait for 2 years before that clears. So that could have an impact on your mortgage that you're trying to take, right? Because what lenders think is, okay, if he missed a payment for somebody for £25, he's very likely to miss my £1,000 payment as well. Because they think you're not very sort of responsible. So try and avoid that, right?
And it stays there for 6 years, doesn't it? That's what people don't realize, that one missed payment.
It does, right? With the type of the mispayment, lenders can be a little relaxed after about 2 years, right? They are a little less tolerant about some payments than the others. Things like credit cards and all that, they take it very seriously, right? So those, they're a little less tolerant. So with credit cards, at least set up that minimum payment, right? Because quite often that minimum payment is few pounds, right? Depending on how much the limit is. So set up one for the minimum payment, then you have met your obligation at least. So lenders see that you have met your obligation and they're okay with it. But then overpay, right? So if your credit card bill is say £500, minimum payment might be say £10 and pay the 490, right? Because even if you forget and settle it 2 days later, it doesn't matter. You already paid the committed amount. That's the one that's very important.
Definitely. Okay, number 8, beware of joint products.
Oh, yeah, that's something you have to be very careful. Now, I see this quite a lot, especially with the first time buyers, right? They just come out of uni, want to buy a first house, but while they were in uni, they had a electric account with one of their mates, right? So the mate forgot to pay the electric bill. Guess what? It's on your credit file as well, right? So be careful who you're going to have joint accounts with. Electricity, council tax, things like gas, all those utility stuff, telephones, people have land phones or broadband. They have joint names because it's important that they have it, and one person takes responsibility to pay that, but the person has forgotten to pay, right? But it impacts you. Like you said, it could be in your file for 6 years, right? So somebody else did the mistake and you're paying for it, right? So be careful when you're having joint accounts. Just make sure that the person is reliable, or as much as possible, have it on your own name if you want to have more control over that.
Because eventually you'll have to settle it anyway, especially if it goes to a CCJ or something. Like, you don't get away with it if it's in your joint name.
Yeah, it's quite sad because we see this quite a lot, especially with graduates. They come out with good salaries. They can easily afford the mortgage, but somewhere down the line, somebody's forgotten to pay the broadband bill for £25. And it's not you, it's your mate, right? So you probably want to avoid those situations.
All right, number 9, don't max out your headroom.
Oh, yes. This is mainly to do with credit cards. A lot of people think, if I show the lender I've got a limit of 10,000 that I can pay up to 10,000, thumbs up, it works well for us, right? But it doesn't, because the lender looks at, okay, how much are you using, right? So that means if that person, if they have a 10,000 limit and they're hitting 9,000 every month, I mean, it feels like, the person needs 8,000 or 9,000 every month to settle the credit card, right? So it doesn't go very well with lenders. So don't max out on your headroom, right? So make sure that there is sufficient gaps, and make sure that you are showing the lender that you're using the credit cards and all that very responsibly. I mean, I've had instances where people have maxed out their credit usage very close to the credit limit, and lenders have turned around and said, we are a little worried about this client, right? Credit scores seem fine, but sometimes that has a problem, right? But quite often, if you're maxing out your headroom, your credit score drops anyway, right? So just be mindful of that.
And the last point that we have today, number 10, download your credit file and seek professional advice.
Oh, yes. I think it might have been the first point as well, right? So we often save the best for the last, I guess. Credit file is quite important. Anybody trying to get a mortgage needs to download their credit file. I think, in my view, like I said, there are different credit reference agencies. Check My File is generally a good one because it consolidates the 3 main players, right? So that has a consolidated score, and quite often we believe that banks look at consolidated scores now rather than relying on one provider. So if that's the case, this might be a good starting point. Download one. Often it's free for a month with most providers, right? So you can cancel it within a month and you don't have to pay anything, right? So download a report, go through it. If you don't understand it, quite often first-time buyers don't. Sit down with somebody who knows, or maybe an advisor like us, right? And we will be able to guide you on what things you need to correct, right? So simple things like electoral roll or addresses, we can easily spot because we look at this all the time, right? So that's why I'm saying it's best to sort of download one and seek professional advice, because they might be able to guide you in the right direction. Sometimes your credit score going up by 25 could be a make or break thing, right? So that can help. So it's always good to go through it with an advisor.
Definitely. Well, thank you again, Ifti, for some more great advice as always. I just wanted to point out that these points may or may not be applicable to everybody, so we really do recommend that you speak to an advisor. And if you don't have an advisor, as Ifti said, I will leave our contact details below, as we are always more than happy to help. A little reminder that a mortgage is secured against your home or property, so it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.